Again, just in terms of the prep work, because it's not like you could just take VAT and put it into force. As we saw here in the United Arab Emirates, you've got the tax procedures law, which needs to, or has been already, in many cases, begun to be finalized. What else needs to be done in terms of laying the groundwork for the VAT?
I think, first of all, there's two aspects to the question. In terms of readiness, there's readiness from the perspective of the authorities, and then secondly, there's readiness from the perspective of the actual businesses. In terms of the authorities, Saudi and UAE are well advanced, and they've basically announced, and Saudi have also included in their law provision where VAT will be introduced from 2018. In terms of the other GCC countries, they're still under progress, so we don't know exactly when they'll implement, but they expect to implement between 1st of January 2018 and 1st of January 2019. Now, in terms of the businesses themselves, businesses are getting ready, as Bruce mentioned. Larger businesses are more advanced in their preparation, but a lot of SMEs haven't done much. Many of them were waiting for the laws, and now we have the law in Saudi. And we also have the regulations in draft. In the UAE, the law and regulations have yet to be issued, and a lot of people are waiting for these laws and regulations. But I think the authorities have done a lot of work to facilitate the preparation for VAT.
Yeah. And I mean, you mentioned a very important point, and that is that the GCC is not going to implement everything together. So you have some countries who are expected to come in a little bit later on. Is that going to create arbitrage opportunities? It's going to be a headache for the regulators. Look, I mean, the vision was put it in together, one go.
They always anticipated that there'll be a bit of break between some of the countries coming in a little bit later. And look, if you're talking the rates of VAT that you find in Europe, where there's 20+%, yes, I'd say you've got a serious risk of potential arbitrage. At a rate of 5%, not really. You're putting yourself at huge risk by creating a situation where you can arbitrage. It is going to last only for a maximum of a year. The potential, really, there are rules which are going to sort of allow for prevention of arbitrage. I don't think it's going to be a significant risk. Look, any tax law, there's going to be someone who's going to try their luck with it. I don't think it's going to be a huge problem as a unique type problem at this stage.
I mean, the 5%, again, very low compared to international standards. I'm looking here at the OECD average of 19.2%. Could that be increased going forward? Is this, I mean, are you foreseeing this to be a starting rate, and then depending on the circumstances, they could easily move on that, amend it?
Absolutely. As with any tax, when a tax is once introduced, the rate comes in and the rate can be increased. And there is a mechanism, I think, in the GCC framework which allows the rate to be increased. I wouldn't expect that in the near future, but perhaps after a few years, there is a possibility the rate can be increased.